Hello people, welcome to Millionaire Nation. Today we will find out how bad the recession is in the United States.
New data from the Commerce Department is showing that the economy shrank from April to June. It's the second straight quarter where the economy...
With soaring prices, rising interest rates and real wages going backwards, we haven't felt this pessimistic.
US where economy is heading into a recession, which is short and shallow. It can come over the coming year. This
inflationary scourge hitting the United States. The war in Ukraine has, of course, triggered price rises worldwide.
New numbers today show that the gross domestic product, that measures the nation's total economic output,
A recession is a time when the economy is doing badly. It is usually marked by a drop in the gross domestic product, GDP, high unemployment, and less business activity. In the United States, a recession is usually defined as when GDP goes down by 2 quarters in a row. Recessions are a normal part of the business cycle, but they can have very bad effects on people, businesses, and the economy as a whole. Let us know in detail what can happen because of the recession. The United States has been through several recessions in its history, with the most recent one happening in 2020 because of the virus outbreak pandemic. But there have been many other recessions in the past, such as the Great Recession of 2007 to 2009, the dot-com bubble recession of 2001, and the savings and loan crisis recession of the late 1980s. The collapse of the U.S. housing market in 2007 to 2009 started the Great Recession, a worldwide financial crisis. The main cause of the crisis was the widespread practice of giving subprime mortgages, or mortgages to people with bad credit. These mortgages were then bundled together into mortgage-backed securities and sold to investors all over the world. We have a full-length video about the housing market bubble that tells the whole story. Please look at it after you finish watching this video. Let's get back to our point. First, we'll find out what are the main reasons for the recession. Consumer spending slowing down is one of the main causes of recessions. This can be caused by things like high unemployment, less access to credit, or a drop in consumer confidence. When people stop spending as much money, businesses see less demand for their goods and services. This means people lose their jobs and production slows down and having less money, which can make people spend even less and make the recession worse. A recession can also be caused by a number of other things. For example, if there are too many goods or services on the market, prices can go down and businesses can make less money, which can lead to layoffs and less production. In the same way, a drop in the housing market, like what happened before the Great Recession, can also lead to a recession. When the value of homes goes down, it can cause people to stop paying their mortgages, which can hurt banks and other financial institutions and send shockwaves through the economy. Another important factor in the start of a recession is also international trade. For example, if the economies of a country's main trading partners go down, exports can fall and the country's economy can get worse. This was a major cause of the Great Recession, as the collapse of the United States housing market had a domino effect on economies all over the world. If you've watched this far, we really appreciate it. If you liked our content, please click subscribe and like so that YouTube knows we're making good content for you and shows our videos to more people. Let us get back to our point. Now we'll know how the government and other financial companies will handle a country's recession. Governments and central banks often use different economic policies to try to lessen the bad effects of recessions. For example, the Federal Reserve, which is the central bank of the United States, can lower interest rates to encourage borrowing and investment. It can also engage in quantitative easing, which involves buying securities from banks to increase the money supply and boost economic activity. But these steps can also have effects that weren't planned. For example, low interest rates can cause asset price bubble burst, like the one that led up to the Great Recession in the housing market. Also, government spending can increase the national debt, which can be bad for the economy in the long run. Recessions can affect people and businesses in big ways. During a recession, when businesses cut back on hiring and production, unemployment tends to rise. This can make it hard for people to pay their bills if they lose their jobs and lower the overall standard of living. Businesses can also go out of business or make less money. which can cause financial problems for the owners and employees. In addition to their effects on the economy, recessions can also change how people feel about themselves. Uncertainty and insecurity caused by job loss and unstable finances can make people feel more stressed out and anxious. This can hurt your mental health, your relationships, and your overall health. Also, if you want to know how Elon Musk caused stress and anxiety among Twitter employees and turned the company into a complete joke, please watch this video that was hand-picked out just for you. Thanks for taking the time.